If you've been following our coverage all day, you've heard of the stock market today. Another, what I'd like to say is a brutal day. We saw the circuit breaker, which I didn't know what that was 2 weeks ago. We saw the circuit breaker activated right after the opening bell. The market down almost 13% on the day. So who better to bring in than Mike Lomas of the Financial Guys? Mike, good evening.
Hey, Joe. How are you, buddy?
I'm doing all right, Mike. Now, I don't understand anything of the markets except for the few things that I remember from 10 years ago running your show on Saturdays. What's that?
I said we spent so much time together. How could you not know any of it?
After a few years, Mike, I kind of forget that information.
Years?
Now, so I'm looking at today, and obviously people are scared. People are selling. What is the right move looking at this market today with the unknown future?
Well, I think, look at I've been talking about two different types of investor. The first investor is an accumulator, somebody who's putting money into a 401k plan, somebody who doesn't plan on using the money right away. And, first of all, you should have gone through a risk tolerance questionnaire before you invested the money. But let's just say you're an accumulator. You were putting money into the stock market. 100% of your money is in the stock market, and it's down right now. If you don't plan on using that money, I would encourage you not to do anything, right? I would encourage you to just sit tight. If you can increase your contributions, increase the amount of money you're going to put into those types of vehicles, you can buy more shares right now at a discount. I mean, there are some unbelievable discounts out there. I know it doesn't feel like that, but the stock market has always been a weird animal. When it's really cheap, nobody wants to buy it. When it's really expensive, everybody does. If you are retired, and this is really important, it's really, really important that you have a well-diversified portfolio, and 100% of your money should not be in the stock market. And our clients that are retired, we're making sure that they've got eggs in different baskets. We call it bucketizing your money to make sure that, okay, look, we've got some stocks. Yes, maybe they're down now, but we don't need to touch them. There's other places we can grab money from, whether that's short-term government bonds or a money market account. So I think it really depends on where you are in the investment world as to what types of moves you should make. But, you should never make panic decisions. And we're seeing panic now. I guess we're really trying to figure out is where is the bottom to all this, right? And I do think as much as there's a ton of panic out there, part of that panic is good. It usually is the sign that we're close to a bottom, and we are seeing a record amount of panic out there.
Yeah, Mike, you answered my next question. So looking at the market, looking at everything right now, and, I don't understand futures all that much, but after the day the market had today, I'm looking at futures up right now. How does that work? And are you going to have days where, okay, it lost almost 13 points today, or 13% today, but you see a small rebound tomorrow, and then maybe another day like today again?
Yeah, well, the market is trying to find a bottom right now, and really a bottom always comes with not necessarily buyers, but with a lack of sellers. I used to have a friend that used to say, these are the types of markets that return stocks to the rightful owners. And that's really true, right? You shake out all these sellers, and at the end, there's nobody left to sell, and then the markets start to stabilize. I think there's a few things out there, though, that I think are positive, and I know this might sound a little crazy, but one of them is the increased testing capacity that we're seeing now. We've got to find a number here. How many Americans are infected with this, and why that's important is because the market is reacts to certainty and uncertainty. And, we know we're not going to fix this thing or cure it tomorrow, but if we can start to see a decline in numbers, or we can start to see the light at the end of the tunnel, the market is a leading indicator, and it's going to start to move forward saying, okay, we see that we're finally getting out of this. I do think, by the way, that the market is pricing in a huge recession. And what I'm optimistic about is, yes, we are going to see economic activity go back. There's no way you could shut down NBA games and NHL games and not have a hit to the economy. However, I think there's one thing that is a shining star here, and that is technology. And what I'm seeing is people embrace technology like never before, whether that's Zoom meetings or making sure we're still flowing paperwork through email systems. I know we're doing a Zoom webinar. We had about 50 people that were going to come into our office on Wednesday night. There's still going to be about 18 or 19 folks coming in, but the rest of them had decided that they're going to watch it through a Zoom meeting. So Technology, I think, is going to help sort of limit some of the damage here, and the market is pricing in the worst case scenario. And I think you'll see the economic numbers. Again, I'm not saying they're going to be great, but I think they're going to be better than expected, which should help us moving forward.
Yeah, say that moving forward and that recovery, the president spoke of when this is all over, the markets will be back. Do you see that? Do you see them making all of the profits back once this fear has subsided and we get back to that life as usual?
I think it really depends on how long this thing moves itself forward. I think there's still time to see some what's called a V-shaped recovery, where, wow, okay, we've either found a cure or the numbers are going way down. Or the other thing is we could get some huge economic stimulus out of Washington. Now, so far, the president and the Federal Reserve, everything they've done, the markets haven't cared about. But I really think what the market's looking for is like a huge tax cut or something like that to say, you know what, we're going to give you a lot of your money back to stimulate economic growth long term. I think that kind of stuff could put the economy, or at least the stock market, back on track in the upswing. I do think this is going to be a little bit longer of a grinding process. But I think, if investors start to see, okay, look, we found a bottom, we're moving forward, I think that they would start to feel optimistic again and start to, maybe put this thing back on track. I will say that it's tough with information everywhere. I think, investors need to sort of take a little bit of a step back and sort of look through some of this stuff. I hear, oh my gosh, there was somebody who has a disease and he's in this bank, or he's got the virus, I should say, he's in this bank, but then you find out he never actually went to work, right? So, I think the numbers are going to be less than expected, but I think the economic activity, although down, is not going to be down what the stock market's pricing it in, and then we can build a bottom and move forward. But to say we're going to recover all these losses in 2 weeks or something, I don't think that's going to happen.
All right, Mike, let me ask you, precautions. What have you been doing to the last few weeks, and any way your work or your life is changing these next few weeks that you're doing to help stop the spread of coronavirus?
Well, I think, you're starting to see everything around us change, right? Like I said, we had a seminar planned on Wednesday night. Typically, we would think nothing of having 50 people at our office, but, we called them and said, how comfortable do you feel coming in? We have the capabilities to, have you sit at home and watch it through a Zoom meeting. Would you want to do that? And, that was different. I will say, I think you're going to see life change a lot after this. And I think you're going to see, people start to embrace technology a little more. We'll go back to normal. The U.S. is very resilient, that we're going to go back to, doing great things, and the market will come back. But I do think you're going to see more and more of embracing technology. It's funny. I do find myself, at least my wife's making me wash my hands a lot more. So
that's the thing, though. Shouldn't we have been washing our hands all this time?
Yeah, I guess. My wife's everywhere we go, she's got hand sanitizer now. But let me just say this from an investment standpoint. Some of the things that we did, and we were encouraging people here on News Radio 930 WBEN for the last year to make sure you've had your portfolios on rebalance. And so we were taking some of the profits from 2019 and setting them aside. And the goal now is to just rebalance the other way, right? Stocks are cheap, so we want to take some of the profits from the bonds and move it the other way. So a good management, a good plan, although not perfect, I haven't found anybody that can get out at the top and at the bottom, but you should be making those subtle moves, and you should have sort of had a portfolio designed to at least set yourself up to take advantage of this pullback as you go forward.
Mike, this is the last question, and this is just my interest. There's no importance to this question, I guess, but if this hadn't happened, would we still see the market surging right now?
Oh, I don't know about that. I think, there was some concerns, political concerns out there. You definitely saw some uncertainty with, when Sanders was starting to gain some momentum there. And I also think the markets were a little bit expensive. I certainly don't think we would have seen this, right? This is a historic pullback, and, we'll be reading about this in textbooks for the next 100 years. So I don't think we would have seen the quick rapid decline and the 30% pullback in the stock market, but I'm not sure we would have continued to see gains. I think the stock market was a little bit expensive price relative to corporate earnings. I think we had some political uncertainty out there, and there's this thing called global debt that nobody wants to really focus on, and I think the markets were already a little worried about that in places like Europe, Italy. Some of these places that are being hit by the virus, I think part of that is the amount of debt that they have out there. And at some point, we as a world, we as a country have to, start to say, okay, stop the bailouts. Let's give people their own money back and let the strong survive and let the weak companies go away. And you're seeing some of those weak companies and some of their balance sheets get exposed here as the prices go down. It's amazing to me the amount of companies that don't have enough cash to make it 2 or 3 weeks. That's not a good business model, right? And I think you're going to see some of that exposed. But the real gems, the winners, will make it out of here bigger and stronger and better, and that's the ones you want to focus on if you're an investor.
All right, Mike. Well, I'm sure we'll be in touch through all of this, and we'll definitely be tuned in Saturday at 1.
Okay, buddy. Take care.
All right, you too. Mike Lomas joining us of the Financial Guys. He and Glenn Wiggle on WBEN Saturdays 1 to 3.